Hello guys, welcome back to another session. Today I'm going to be talking about chart patterns, right, and how to identify them on the chart. On our previous video, I talked about technical analysis and how to draw trend line and also how to draw support and resistance, how you can spot them and identify them on a chart, right? So today I'm going to be talking about chart patterns, right? And also in the previous video, I've talked about candlestick patterns, which I dropped a PDF, the Candlestick Bible, so you guys can go and study it and be able to recognize different types of candlestick patterns, right? You can get familiar, which you can get familiar with, sorry, which you can get familiar with and be able to spot and identify them on your chart. So today I'm going to be talking about chart patterns, right? These chart patterns are patterns which, when you spot them on the charts, you should be able to to take advantage of them, take trades from those chart patterns, because these are patterns that has happened before, that are repeating themselves, right? In past history, they have happened before, and they are happening again. They always happen again. They repeat themselves, right? So now I'm going to be talking about few of them, the most common ones, right? I'm not talking about they have so many, but I'm going to be talking about the most common ones used, right? And they are the ones commonly used, right? And it's very easy to identify them. It's very easy to spot them. So first, I'm going to be talking about the double top and the double bottom. All right. It's also known as the W and M pattern. All right. So right here, this the W pattern, right? And that's this is a W pattern, and this is M pattern. All right. It's also called the double top at the double bottom. Why is it called double top? As you can see, it has first top and second top, right? Which make it equal, right? It's called the double top, right? Also with the double bottom, it has double bottom, right? First and the second, which make it equal, right? The double tops is always identify, like you can find the double top always in an uptrend, right? And you can find the double bottom always in a downtrend. That's where you can find the double bottom and the double top, right? In our last discussion, I also talked about trending markets and how to identify it, right? You can identify trending market by by higher highs. That's the uptrend. You can identify it by higher highs, the market making higher highs, right? Why the downward market, which is the downtrend, it's making lower lows and lower highs, right? That's how you can identify the up and the downtrend, right? Even looking at this, you know this uptrend, right? You can also identify an uptrend or a downtrend using a trend line, all right? So as you can see, even a 2-year-old chart can tell you that this market is going up right here. This market is going up right here. As you can see, the market is going up. So you can see this is a trend line. If you've watched the previous video, you know how to draw a trend line, and this trend line is going upward, right? A new let me just say a newborn baby. I wanted to say newborn baby can identify this, but let me just say that because that's that's a lie. So even a child can identify this, right? That this thing is going up. Same thing with the downtrend. I haven't found the downtrend, right? Okay, let's use this. even a child can identify that this market right here at this period, it's going down. All right, so that's how to identify. Another way of identifying an uptrend and a downtrend, right, by drawing your trend line and knowing the direction of the market. So now I say we can identify, or we can find the double top in an uptrend, while we can find the double bottom in a downtrend, right? Right. All right. This is a downtrend, and let's spot the double bottom. As you can see right here, this is a double bottom, right? This is a clear double bottom we spot right here. And where can we find this double bottom mostly, or where can we trade this double bottom and double top? Where can we find trading opportunity? All right, because this right here, this is a double bottom, right? We have the perfect and the imperfect, right? The one that's perfect and the one that is not that perfect, right? What I mean by perfect and imperfect, because sometimes you can draw right here. Now this is a double top, okay? This is a top, but it's not perfect, right? This is also a M pattern, right? Why I say it's not perfect, because the first leg is lower than the second leg, right? That's why it's imperfect, but it's still double top, right? Terms of those forex markets, we use there as a zone, not just a line, a zone. If you're drawing your support and resistance, you draw it as a zone, not just a line. Okay, so the perfect one is the one that has equal lows or equal highs, right? Equal low or equal highs, right? I think I spot another one right here. This is kind of equal, but the wick is higher than the other. Okay, so this also a double top and hem pattern, right? This is also double top and hem pattern. So as you can see, I'm just identifying them on my chart right now. This is how you can identify them on your chart, and how can you trade from them? How can you find a trading opportunity? All right, the double top and the double bottom are usually traded from from a key zone, right? From a key zone, right? Where are the key zones? The support and the resistors are the key zones, the key areas. They are the key areas, the key zones, right? Support and resistance, right? So your support, your resistance are areas which are important in the market on your chart, right? If you say let's spot the support right here, which this double bottom was found, right? Not that it always happen at the resistance or support area, but mostly if you want to trade, you cannot just go and trade from any area. It's advisable you trade from support and resistance, right? You spot those patterns. If you spot those patterns in support area or resistance area, that's a very good area to trade from. Seeing a W pattern at the support area, that's a very good signal. That's a very good signal for that's a very good signal for buy, right? That's a good buying opportunity, right? Spotting double top at resistance area, that's a good selling opportunity. As you can see, I say it's always a zone and not a line. As you can see, this was this was a resistance area formerly, right? Now acting as a support area. Now if you draw it as a zone right here, if you draw it as a zone, you find out that this was a resistance area and now acting as a support area. All right, but this is not supposed to be right. Why? Because but this is the highest high right here, so this is how it's supposed. Actually, it didn't come back to this area, but right here it's a support area. Why? Because as you can see, this is support area which price came back to and reacted from. All right, let me just delete this. Just forget about this. All right, let me use this support area right here to draw it. It's a zone actually. So as you can see, that's the zone. Price came back into this zone, gave a W pattern, and started moving upward. That's a good buying opportunity. All right, as you can see, once you just spot your W pattern, then you can buy from here. Also, right now, this is the neckline and the, what's it called? We have the neckline and we have the neckline. All right, I was trying to. All right, let me show you the neckline, what the neckline is. All right, this is the double top and this is the double bottom. And as you can see, this is the equal high, this is the equal low right here. Now, this area right here is the neckline. This area right here is the neckline. Also, as you can see from this one, that's the neckline. All right. So, how can you make use of this neckline? Just as we spotted the double bottom at the resistance, as at the support area. So you have to, for you to get a trading opportunity, you have to identify the neckline, right? You have to identify the neckline. So you should be sure that yes, it's a double bottom, right? After you identify this neckline, once it breaks above that neckline, that's a trading opportunity. You can buy from there. Some people wait for the retest back inside the zone, right? Once it breaks that area, once it breaks this neckline above, that's a trading opportunity where you can buy from. All right, you can just buy from here. Your stop loss should be below the zone, the equal lows, all right, and you target a minimum of 2 hour, right? Target a minimum of 2 hour. This is how to get a trading opportunity using support and resistance plus chart patterns. This is a good trading opportunity. As you can see, if you are trade from those points, you're going to win the trade. All right, so that's how to spot chart patterns at key level and take advantage of them. All right, so now I've spotted the support area. I'm trying to spot a resistance area which I haven't gotten yet, right? Okay, I've gotten one right here. As you can see right here, this is this is an uptrend. Like I say, even a child can identify this as an uptrend, right? So all this pattern I'm talking about, they are known as the reversal pattern, because if the price is going up right now. As you can see, price is going up. So for it to reverse, when they say something reverse, it went the opposite way it was going initially, right? Price was going up, now it's reversed, it started going down. All right. So these patterns are patterns used to identify when the trend is about to change, right? It's used to identify the change of trend earlier. Okay, so as you can see now, this is the double top right here. This is the double top right here. This is the double top right here. If I was to trade this, I identified this as a double top, then I spotted the neckline. As you can see, this is the equal This is the equal highs, and this, okay, this is also the neckline right here. That's the neckline. So at the break of this neckline, you can go in for your trade, sell position, stop loss above your support, your resistance area. Because this double top is a resistance area, double bottom is a support area. All right. So now you can go for your minimum of 2R, right? As you can see, this was a winning trade. It was spotted at a, I think, okay, this is the highest high price has ever made. So this is just the current resistance right here. Okay, so now you can be waiting to trade from this area in the future. You can be waiting to trade from this area in the future, right? I'm trying to show you a trading opportunity which you can look for in the future. All right, this is the highest high price has ever made. So if you're looking to trade this in the future, right, because price always repeats itself. So now as you can see where price is currently is, right now, what are you going to be looking for? You're going to be looking for price to continue making higher highs, price continue making higher highs, higher highs, higher low, higher high, higher low, higher high, higher low, higher highs and higher lows, right? Price making higher highs and higher lows. And when price get to this zone right here, you should be waiting for a M pattern or a double top. Immediately you see something like this, what you have to do right here now is to, maybe price is right here now, already trying to reject that zone, showing you that okay, maybe it's trying to move downward. What you do is to draw your zone right here, which is the neckline. Now what you're going to be waiting for is price breaking below this zone, this neckline. Once price break below, that's your trading opportunity. You should be going in for sales at this zone, stop loss above this area, and you should be going for a minimum of 2R, right? That's your minimum, the minimum you should be going for, right? Because risk management is very important, risk to reward ratio is very important. So this is a trading opportunity you should be looking at in the future. All right, this is how to trade support and resistance, then using chart patterns, support and resistance plus chart patterns. Right, as you can see, here is also a trading opportunity. Here is a support, is a resistance, right? You can also, even if price did not get to this area, price can come back to this area, give us double top and start reversing. So those are the ways you can find trading opportunity while trading support and resistance plus chart patterns. All right, I just finished talking about double top and double bottom. Now the next is head and shoulder patterns. All right, head and shoulder patterns, head and shoulder patterns. Right. So let's zoom in now. Right now, as you can see, this is what we call head and shoulder pattern. Okay, this is how the head and shoulder pattern looks, right? And as you can see, this right here is the neck line. This is the neck line, okay, which is also a support. And as you can see, this area right here is resistance area. Is also a resistance area. Why? Because this resistance price resisting that area, came back and came back to retest it again. All right. So this is called the head and shoulder pattern. The opposite of this is called the inverse head and shoulder pattern. The inverse head and shoulder pattern. Inverse head and shoulder pattern. As you can see, this is it, and this is your neckline. All right. This is your neckline. All right. So this is also a reversal pattern. This happen always in an uptrend, and this one happen always in a downtrend. Okay, and it's also easy to identify. Okay, it's also easy to identify. Right, I'm trying to see like, okay, I've gotten inverse head and shoulder pattern. All right, inverse head and shoulder pattern, which is right here. As you can see, this inverse head and shoulder pattern. Inverse head and shoulder pattern. All right. So this is a trading opportunity, and as you can see, it happens at a resistance support area, which is right here. As you can see, this is support zone. Price came to and gave that pattern. If I take this out of here right now, I'm coming. I take this out of here right now. You see this inverse head and shoulder pattern. All right, and as you can see, this is the neckline. Yeah, that's the neckline. Let me draw it on the chart. This is the neckline. Okay, a proper break above this neckline is your trading opportunity, right? So as you can see, this is the proper break of the trend line right here. So of the neckline, I need to say the stop loss below this support area. All right, the head and shoulder pattern, the stop loss is usually below this support area. So if you're trading, you trade from here, the break, your stop loss should always be below this zone, right? And you target your minimum of 2 hour. So this is how to spot the head and shoulder pattern. All right, I've not seen the head and shoulder pattern. This is the inverse head and shoulder pattern. I've not seen that, but you should know that the opposite of this is the head and shoulder pattern, and it always happens in an uptrend, right? It always happens in an uptrend when the market is making series of higher highs and higher lows, right? Then you can see it at the top. Why, if market is making lower lows and lower highs, you can see the inverse head and shoulder pattern at the bottom, just like the double top and the double bottom. So that's how you can identify these patterns at key levels, right? Key levels, which is the support and resistance levels. All right, now what we are going to be talking about is the flag patterns, right? The flag patterns, which is going to be the last. Also you can also come on the chart and try to identify all these patterns yourself, right? So I'm going to give example of the flag pattern. Okay, what's a flag? You all know a flag, the Nigeria flag, how it looks like. All right, so let's see how it looks like. Let me give an example of how a flag look like. All right, now as you can see, this is how a flag looks like. Okay, this is how a flag looks like. All right, now how can we identify such a pattern on our chart? All right, how can we identify such a pattern on our chart? Trying to look for something. the flag pattern. I haven't seen any yet, but kind of all right. I'm trying to see something like this. So this is kind of a flag pattern. I would say yes, this is kind of a flag pattern. As you can see, it's similar to what I drew, right? As you can see, price making higher highs, right? This is a bullish flag pattern, right? We also have a bearish flag pattern. Price making higher highs now. Price make this impulse move. Now consolidating. All right. Okay, let me explain the impulse and consolidation uh moves, right? When price makes an impulse move, right? It's okay, the impulse move is always faster, right? Like this move right here. This move is just faster, swift and fast, right? It happened fast, just straightforward. Let me use that word, straightforward. Why the consolidation phase is where the market is ranging at a particular zone, all right? Market ranging at a particular zone, creating support and resistance, right? Creating support and resistance. As you can see, this market is ranging. That's the only thing I didn't explain right here is this ranging market, because we have the uptrend, we have the downtrend, and we have the sideways trend or sideways market, right? Market moving sideways, the market moving sideways is called the ranging market. The market moving upward is called the uptrend market, while the market moving downward is called the downward market. So now what am I trying to say? How to identify a flag pattern? Once you see the up move, right, the uptrend, followed by a ranging market at a particular zone, that's a flag pattern, right? This is supposed to be in a lower time frame, um but I'm just using here. As you can see, this is the move, the up move, right? If you go down to the lower time frame, lower than there, you see that price is making higher highs right here, higher highs right here. Then once it got to this place, it started ranging, right? Ranging. So once you draw your zone, your support and like I say, ranging markets create, it always creates support and resistance level, right? It always creates support and resistance level. So right now, once the price starts to make support and resistance level, what you just do is spot your resistance level and your support level, right? And the break above, that's a trading opportunity for you, a buying opportunity. All right, so as you can see right here, price made this move to the upside, and price started to range at this area, right? Then now price broke above, so that is a buying opportunity for you. Okay, that's a buying opportunity, you buying right here, and stop loss below this area, this is your zone, and you target the minimum of 2R. Okay, this is a trading opportunity for you. Okay, so that's how to use the flag pattern to find trading opportunity, right? I hope you're clear with this, guys. So what's the flag pattern? It's just like a flag, the normal flag, price making a pattern just like the normal flag, okay. As you can see, they have different types of flag patterns, right? But just similar. It's just for you to be able to spot them, right? Just for you to be able to spot them. You can see something like this. Sorry. You can see something like this. Let me draw it well. You can see something like that, right? As your pattern, right? you see it's uh bullish. What is it called again? I've forgotten the name. It's a flag pattern, but it's kind of in a bullish pendant, something like that. I think so. So as you can see, it's just as a form of flag, right? It's just as a form of flag. So that's why I say they have different types of flag pattern. I've forgotten the name, but I'm going to try to get the name and let you know what it is. But they are all flag patterns. They have the bearish flag pattern, right? Which looks like this. Bearish flag patterns, which looks like this. As you can see, that's how it looks like. You can see your your support area, your resistance area, price. You can see that's just how the flag patterns look like. Okay, that's just how it looks like. Trying to spot something like that again on the chart. But I hope you guys should be able to spot something like this on the chart. It's also easy to spot them. So trading, how to get, yeah, spot something, yeah. This is a flag pattern. This is a flag pattern, right? Exactly. As you can see, this is a flag pattern. Okay, this is where you can get your trading opportunity right here. Stop loss below this zone and you target your 2 hour. Simple as that. Okay, simple as that. As you can see, those are examples of the flag patterns. So I'm going to be stopping right here. Okay, I'm going to be stopping right here. There are so many of them, but these are the most common ones which you can use to trade, and you can familiarize yourself with them, right? It's not even good to try to study, or but it's good to know them, like check out for them, but you find a particular pattern, study it and get used to it so that you can trade from those patterns. Like you can use that pattern as your strategy and master it and be able to use it to trade. So mastering one particular pattern helps you to be consistent, right? And helps you to spot it easily. So when you are trying to master one pattern, you spot it easily. It will be very easy for you to spot it, right? Because you've mastered just that one pattern, right? So that's why it's good for you to master just one pattern. All right. So that'll be that for that. I hope you understand this. And if you don't understand anything, you should come to my DM and ask some questions. All right. So I'll be dropping the next video soon. Please stay tuned.